Surgeons, elite masterminds, what's going on? This is Diamond Life, and I'm doing a win review on GBPUSD using the dollar as a cross reference. So if we take a look at an ICT bullish bearish mitigation block. So if you understand the mitigation block with ICT, you got a high here, you got a lower high, and then you got the low. So we look at the lowest down close candle, and then we extend it out. But you have to understand time frame correlation, because right here, if you just would have marked up the lowest down close candle, you would have marked up this candle here. You would have marked up this candle here, and this would have been a wrong candle. Okay. So the lowest down close candle is based on the bodies is this one here. So I had to go to this. So I would have marked it out here, and it would look like it was bullish because it closed above it. So you've been looking for buys and then would have been disappointed with this huge push down. So I had to go to the higher time frame, and that's what this box is right here. This is a 4-hour bearish mitigation block. So in my 4-hour, I have the green right here. You should probably be using color coordination to help you not get confused. So you can actually see the executions on here. Okay. Now right here I went short. Okay, then I went short again. Why? Because I knew price had to take out this low. Okay. Now I actually sold it right here early. I sold the position right there early with the blue arrow, but it shows that I got in here, and I got in here. I thought I was wrong, and then I got out. Then I got back in. So this is a pretty cool move. If you look at the notes right here, I think people should take notes before they get in and while they're in the trade and then after. So right here it says DXY going higher, but I'm scared to take a short because I think I missed a move, or I may be looking at it wrong. You see, this is why I got out right here. But if you don't have the notes, you're just going to guess on why you got out. Then I got back in on a short Y, because when I looked at the DXY, let me double click back on this. Oh God. Okay, so when I look, it says stay in the sale here till the DXY hits the bearish breaker on a 1-hour chart. Okay, so basically, if I pull up a whiteboard, I wonder if I could pull up the whiteboard. Hold on quick. If it'll allow me to just do it easily. I think that's the whiteboard right here. I just want to show this whiteboard real quick and show what made me take the trade and what gave me more confidence, even though I wasn't sure at first. So what I'm trying to say is this is the DXY. Okay, so the DXY was approaching a bearish breaker. Okay, so in my notes, if you go back, it says stay long in GU. Because remember, if DXY is going up, then GU, which is GBPUSD, is going down. Usually, okay. So what I'm trying to tell you is that on the DXY, I had a bearish breaker. It was a move like this. Okay, and then price was right here. So if you understand what a bearish breaker is, it's different than a mitigation block. Let me use a different color. So if you understand the bearish breaker, this is the breaker right here. Okay, the last down close candle, which will be the candle here. You got a high, then you got a higher high. At the last down close candle, price usually, if you're going short, you have to wait for it to come up here and then go short in the quadrants. Like this may be a level here, according to the way ICT teach it, 25%, we can go 50%, 75%. And you can put a short here but you have to know where it's going. This is the biggest thing ICT talk about. So I said that to say, right here, when price was coming up right here, hold on. When price was coming up right here, okay, let me use a different color. Right here, when price was here, remember on those notes I just put on there, I said my note says stay short on GU. It says stay short on GU until DXY hits the bearish breaker. So DXY had to come back up to hit this area if you understand how the structure works. Okay. So when price was going up, since I knew price had to go up on a DXY, okay, this is the DXY chart. So when this was happening, let me see if I can scroll down. As this was happening, no, it won't let me. Okay, I'll just draw another one over here. This is what GU was doing. As this was happening, GU was coming up into a bearish mitigation block. Remember what I showed you on the 4-hour chart? This is GU, what I'm drawing right now. It was coming up into bearish MIT-B. Okay. Bearish MIT-B, and this is a bearish breaker. Basically, it's the same thing damn near, but it's not. The breakers are more powerful according to ICT. The mitigation blocks is more of a area of take profit or something, the way he teach it. So what I'm trying to say is I knew that I could go short right here, because remember, this is why I entered at. Okay. I enter it right here. Remember on GU, this is the GU chart. This is for GU. I enter it right here. So why did I go short? Why did I know price had to come down here? Let me use different colors. What I'm saying is, why did I go short knowing that price had to come down here and take out this low right here? So why did I go short? It's because at that time, when I went short here, DXY was here. And I knew DXY had to come back up to this bearish breaker because I understand how the structure works. So I went ahead and took a short here because I know price had to go higher. If DXY is going higher, GU has to go lower. Does that make sense? Please rewind it if you're new, because you're really going to see how you really can get a foothold with this shit. Now, so yeah, I mean, this is GU. Okay, so I just told you, I showed you on the diagram what happened. I need to use that whiteboard more when I'm showing this. And so, yeah, that was a cool little trade. Thanks for watching.